Hi, good morning. This is the Bitcoin Morning Brief. It is June 20th. We have Giacomo, Jimmy, and Tone. Tone, where are you right now? I think it's PorcFest, but it looks pretty fun back there. Kind of hippie.
Yes, I'm gonna put myself on a big screen here for a second. Can you guys hear me?
Yeah.
Yeah.
Okay, I'm just making sure I'm on the big screen. Yeah, so I am at PorcFest. This is my first time here. It kind of looks like this. It's a lot of people with a lot of tents, and so it's a lot. So basically, the amount of people at this campground is larger than the population in the town where the campground is actually based. And it's interesting. I got here last night, hung out with a bunch of people. Dash has a big influence here. Bcash has a big influence here, and it'll be a fight for my entire 3 days. I'm debating some Bcash guy tomorrow. It's gonna be interesting. Like I haven't. It's my first time at this event, so maybe if people like me were coming out to these libertarian events over the last 5 years, they wouldn't have been infiltrated by inferior version of a digital currency.
And when do you speak today?
I don't actually. I wasn't supposed to be here last night. I was supposed to be driving, doing my 7-hour drive today. So I have a debate at 10 a.m. Eastern time tomorrow, and then I have my presentation at 6 p.m. Tomorrow. So the time of this show tomorrow might have to be slightly adjusted. Also, the internet here is absolutely terrible. I can't believe I found this spot in the grass here where my own signal is fairly decent. So I hope my stream comes out okay.
Yeah, it looks like a cross between a campground and a farmer's market. Is that an accurate description of where you are?
That's a perfect description of where I am.
Okay.
All right. All right. Well, that sounds good. Jimmy, how's it going? He's evoking the libertarians. So you guys are my favorite libertarians. I will go to you first. Jimmy, how's everything going today?
Well, things are going good, but yeah, I mean, I'm curious what quote unquote libertarians are doing, like playing with Dash, which is like closed source and everything. But yeah, we'll talk about it later, or Tone will talk about it later. He's muted and talking to someone at the moment. But yeah, we'll figure it out.
And porcupines. But Tone, go
Hey
on mute for
guys,
a second.
hey guys. I just called someone over. I saw him walking by. Your name is, sir?
Mike Newell.
Mike Noel. And the shirt caught my eye where HODL is crossed out and it got replaced by the word spend. You mind? Did you make this or did you buy this shirt?
No, I bought this.
You bought this.
Yep.
Why?
Oh, because that's what I believe in.
So you believe in spending and not holding?
Yes. Well, I believe in both. I mean, but I don't believe that people should just buy it and never use it. I think that if you use it, it has more velocity and more versatility, so it gains value.
Says Keynesians, yay!
Oh, he can't hear you guys because I have the headphones. But I can relay the questions. So does it bother you that a currency like, let's say, the Venezuelan bolivar is a spend-only currency and no one is holding it?
Well,
You're
I
cruel.
went to the extreme.
You're so cruel.
I know I went to the extreme example, but I'm limited on time, so I didn't feel like easing into it. I just went to the extreme case.
I think that you should have, but I think that there's a lot of people out there that just buy it and they never use it. They really don't know that much about, because a lot of people that own Bitcoin you ask them when the last time they've used Bitcoin, and they'll say, oh, I've never used it.
He's using the word use in a very terrible way. I'm getting offended here.
All right, guys, we will move on with the show, but I did want to bring you this point of view, and I've seen this point of view a lot here, so that's why I was just curious when I saw you walking by with the shirt. I like the watch, by the way.
Oh, thank you.
I have the same one in my bag.
Great.
Hold on.
What is up with watches? Why do people like watches? I don't understand this.
I think isn't that the Bitcoin with the private key in the back?
Which one is
Oh
it?
boy.
No.
And we also know the background of how HODL was originated, which was a drunken gentleman on Reddit. So,
It wasn't on Reddit. It was Bitcoin Talk.
It was Bitcoin Talk, but is that spending?
Spending. Yeah, I think that's such a ridiculous argument. I've heard that so many times, and it comes from a very Keynesian point of view with like increasing the velocity of money and stuff. It bothers me to no end when people say you're not using the currency if you're not spending it. You are using the currency. You're using it as a store of value. Yeah. And people seem to refuse to understand that that's a legitimate use case. That really bothers me. So anyway, regardless, let's move on with the show because Tone's running out of battery.
Let's do this, and plus it's spending. So don't worry. I think that there was also maybe a little drunkenness. Just one last one, Giacomo. How are you? And then we will move on. Yes.
I'm fine. I think I can condone spending as long as you only receive Bitcoin as your wage. Then in that case, it's probably okay. It's probably halal.
Well, not only receive it for your wage, but have all your savings in Bitcoin.
Yeah, exactly. Exactly. Yeah. As long as you have liquidated any bad money, then you can spend and be rational at the same time.
I was a straight up holder until I no longer was getting any fiat income, and now I'm a straight up spender of Bitcoin because by force of economics, and that's how it should be.
All right, well, let's get to these stories so that I don't need to think more about the word spender because okay, we're done. All right, spender or whatever. So inside the crypto world's biggest scandal. So Jimmy, you evoked this story yesterday, and I'm really happy that you did. I thought it was awesome. I thought it was absolutely awesome. It's incredibly articulate, detailed description of why ICOs are really, at least in my opinion, deeply flawed. And it does that by taking one example of Tezos and takes it from the very beginning through to the collapse. And like with every single step along the way. So going over to Switzerland, and you know, it's amazing. And I guess I'll just say that, you know, so I write for Forbes. I also wrote a book, and just what I learned, one of the first things that I learned was just that people appeal more to emotions rather than just to the intellect. And so I love this story because it was very emotive. And you connected with these two characters. And through that, I just think it was an incredible way to describe what happened. But you evoked yesterday that we do a bit more of a deep dive on this one. So Jimmy, can you just, you know, what stood out to you? Why did you like it so much?
Well, part of it is, you know, a lot of these other coins are trying to solve governance. Well, this is what governance looks like when you put it in the hands of humans. It gets completely messed up. There are power plays all over the place, and you have to evoke all sorts of like, you know, regulatory people and, you know, jurisdictional authorities and all this sort of stuff to resolve a lot of this. And it gets to become this mess. The fact that Bitcoin does not have strict governance, that it's all voluntary, is a feature, not a bug. All of these people that keep saying, well, Bitcoin's governance is a problem. No, it's not. When you have governance, this is what happens. You get screwed up things like this, like Tezos, where you have power plays and people that are conflicted, and you know, you hold the entire coin hostage and things like that. So that to me was the biggest takeaway, was that human governance doesn't really work, especially in the hands of a few, but even in the hands of a lot of people. You need consensus, voluntary, you know, voluntary stuff is a lot better than involuntary stuff, which is what governance actually ends up becoming. So yeah, I mean, that was my biggest takeaway. I also want to point out that I used to work for Johan Gavers, who is featured prominently in this article. I actually used to work for Monetas back in 2015. And he is an interesting character, and I think it was kind of a fair, accurate portrayal of him. He did used to like care deeply about $30 expenses instead of like the, you know, hundreds of thousands of dollars that he was spending on people that weren't doing anything. So it's actually quite a fair portrayal. Monetas has to rank up there with one of the biggest mistakes of my life. If I just had a normal job and bought Bitcoin normally, I would be a lot richer than you know, what I ended up getting at Monetas. So some little bit of a tidbit insider thing for you.
Thanks, Jimmy. Giacomo, I wanted to turn this one over to you. Again, I just personally liked that this was one specific example of what went wrong and all the issues and myriad of issues in the space. What did you think when you read this? And also, I loved watching Nir and Aaron's recent interview together. I will evoke that, of the power of journalism. So I guess it's a 2-point question of what did you think of the piece? And also, what did you think about the structure of how Wired did this?
So about the piece, yeah, it's very nice, and I also really enjoyed the irony of a governance-oriented experiment falling over because of governance problems. So people tends to underestimate these problems, as Jimmy said. I think that one of the good things about what happened to Tezos and what also happened right now with EOS and all the problems that EOS is facing is that it's actually better to face this problem at the beginning of an experiment, which I think we could rule out as a failed experiment in many regards, than later. I mean, the real danger for investors and even for developers is when a project starts to hiding very, very deeply any kind of problems into buzzword, complicated jargon, text sounding, bubbling, and conflating the problems, hiding the problems, and postponing the problems continuously. So in a way, I think that what happened in Tezos is not like the usual altcoin or ICO story. There is something that can be instructive here, can be educational in the story. So yeah, it's not a bad story in this sense. The problems arise before it was too late and too big to fail. I agree with Jimmy about the personal notation that keeping a 9-to-5 fiat job and accumulating Bitcoin instead of using Bitcoin in order to fund Bitcoin-related startups would have been a good idea for me and for Mir as well. But we had a lot of fun. And probably staying in a 9-to-5 job, I would be richer, but with much less experience, or so. That is what I keep repeating to myself.
Thanks, Giacomo. Tone, what did you think about the piece?
Oh God, everyone that has seen this channel long enough knows that there's no way in hell I was gonna read this piece. I would need I would need the audio book of this. Like, I'm not surprised. Like, all you have to do for me, all I have to do is read the introduction and the conclusion, because this is what we've been saying all along. It's a miracle that Ethereum did not end like Tezos, because it should have, and it probably still will, for the same problems that they're trying to do governance. So everything that Jimmy said, everything that Giacomo said is completely right. And the fact that we all knew Tezos was nonsense, just like all of these other initiatives like EOS. And they continue to come up, and then they continue to go to zero. And then people still think that, oh, if we only fix this one thing, we would do it better. No, it's all the same. The only thing so far that is actually working is Bitcoin. And all of this other stuff is just noise. So that's the part that bothers me, is that we spend so much time, including the show, talking about this nonsense, that we know it's going to end like that. And I don't understand why some people are surprised when it actually ends like this, because this is the most likely outcome for all of this, all of these Ethereum copycats, all because Ethereum got lucky and didn't break down because of governance. And I still think it will, because Ethereum is regulatable, and people are missing that point.
Interesting, yeah, and we're going to be talking about Tron, to your point. Just a tiny bit pushed back. Yes, these are stories that keep coming out. These stories are what we keep talking about all the time, all the failures, all of the fact that they are shit coins. But I thank you, Jimmy, for pointing this one out, because I did really think that by laying out stories and the power of evoking stories is a very powerful tool for people to get engaged with and understand and connect with people. So with that said, we will move on. And this is Tron bought BitTorrent and crypto won't stop talking about it. So it's definitely a hot topic right now. So Tron bought it for $140 million, and let's talk about it. Charlie Lee, specifically in a tweet, equated this acquisition to AOL buying Time Warner, which was massively unsuccessful, if everybody remembers the history. And these are two massive corporations coming together, Time Warner and AOL being. Giacomo, is Charlie Lee right in comparing Tron acquiring BitTorrent to AOL buying Time Warner?
No, I think that it isn't. And one of the reasons I think that this story is very interesting and very educational is that it allows us to try to explain the difference between an open protocol and a company building upon an open protocol. So actually the company BitTorrent is not the protocol BitTorrent. The company BitTorrent is just one private company which is helping the development of the main client for the BitTorrent protocol. It's a little bit like if we compare Bitcoin with the former Bitcoin.com, when Bitcoin.com was working over Bitcoin and not over Bcash. But even this is not a very fair comparison because BitTorrent company was actually doing helpful work in order to have the creation and the evolution and the maintenance of BitTorrent clients. So the difference here is between the protocol and the company is a little bit like when Microsoft acquired GitHub, and everybody thought that now every repository built with Git is in trouble because Microsoft acquired GitHub. Actually, GitHub is just, well, that's more serious actually, because some part of the development configuration is actually, for example, in Bitcoin, based on GitHub and not on Git, like comments and many things like that. But this kind of acquisition is not really dangerous because the protocol itself resists and exists beyond what the private company does. So I think that this story is very interesting because it can be, people can get easily confused between the protocol and the company. Of course, in the case of American Online and Warner, when you acquire something, you acquire all the content. So you acquire everything which is produced and broadcast by the network. In this case, acquiring the company that the main company developing BitTorrent related clients, you can maybe somehow influence the development of the protocol further. You can have some strong voice in the ecosystem, but you cannot really touch the current BitTorrent protocol. Actually, it's something like if I acquire Red Hat, I cannot change the Linux kernel significantly. And if I acquire Bitcoin.com, as somebody has done, and the Bitcoin Twitter handler, you cannot use that to effectively change the protocol Bitcoin, even if you can try to misguide people in this direction. So Scamcoin acquired a legit company working on a very, very legit protocol, a protocol which from which Bitcoin itself got some form of inspiration, even just for the name, which is, I mean, interesting because now from a macro point of view, we have scam coins and ICOs actually acquiring real world companies doing real world jobs. So that's a new step probably in the evolution, but still I think it's very important to state that the Bitcoin protocol as we know it, the BitTorrent protocol as we know it, is safe from this kind of, is not affected directly.
Interesting. Thank you, Giacomo. Jimmy, what were your thoughts on the piece? And also, thank you, Giacomo, for commenting about BitTorrent and how to understand the nuances. Jimmy, can you also comment a bit about Tron and if there is, but also the company behind Tron? That's the one piece that I think I'm still trying to understand.
Yeah, so I mean, if this doesn't show that Tron is completely centralized, I don't know what does. I mean, they bought a company. I mean, what more do you need? Like they're a centralized entity. You can't buy something unless you are an entity in of yourself. I'm gonna agree with Charlie Lee a little bit in the sense that this feels like a company that's buying another company because they're afraid of their own valuation going down all of a sudden. And that's, like they're buying something. We have all this money; it might all go away. Let's go do something with it. That's the type of mentality that I'm perceiving from this purchase. Because how much does BitTorrent have in common with whatever Tron is doing? I don't really know. I'm still waiting for the day when a one of these projects just buys, like, I don't know, Sears or something. Last I checked, the market cap of Sears is like 280 million. So somebody like Tezos could go buy Sears and say, we're gonna make purchasing at Sears only in Tezos coin or something like that. That will be very interesting. But until something like that happens, I don't know. It does feel very frothy, and I think that was the point of Charlie's tweet, is that a lot of this stuff, like you get behavior like this when people think the bubble's gonna pop.
Thank you. Tone, what were your thoughts?
Sure. So basically, in the traditional finance world, when a company acquires another company, the company that's being acquired, their stock generally pops, because in order for the management of the company being acquired to give up all rights of their company, they want a premium on their stock, or they put in all this work and they want the big payoff. Now, the opposite usually happens to a company that's acquiring, because a company that's acquiring just put in a bunch of money into another company to take them over. Now, the market in the financial world will be pretty quick to figure out, is it a dumb purchase or is it a smart strategic purpose? But the default view is that, hey, this company just wasted a lot of their money by buying up another company that they may not need, and the stock of that company drops. That is certainly not the case in the crypto space for two reasons. One, you're not dealing with any sophisticated investors. And you have, again, a coin like Tron, which is totally useless. But when they make news like this, the news itself pumps the price of Tron. So the cost, so it's easy to wave $120 million to a couple of guys in charge of of BitTorrent, which has a lot of competition these days. So they will be happy to cash out. They'll take the Tron coins, they'll immediately convert them to something real, either US dollars or Bitcoin, and they've cashed out. Now, the Tron coin can easily pump on this news. And since Tron is just another centralized company where that token is held by those that, if your project can buy another project, Tron is a centralized company. It has a CEO, or it should have a CEO, and it has a lot of Tron tokens that are traded by speculators that don't know what they're doing, and traders. So the coin probably pumped on this news, so they easily made their investment back. They just bought BitTorrent. So my guess is all of the smart developers that built BitTorrent and continue to support it, all of them will leave, because why else? Why would they stay there? Their project is now in control by inferior set of developers. This is what happened to me and my entire unit when JP Morgan sold us. We all pretty much quit because we felt the company that bought us is actually inferior, and they were not going to let us do what we needed to do. So they're all going to leave, and the Tron people are not going to be in charge of this. This is just a dog and pony show. It's just a way to pump Tron coin to the unqualified public, and to get shows like us to talk about Tron, because we otherwise would not. However, this again goes to show you how the belief in all of this garbage, like anything built on top of Ethereum or any of these other coins like Tron, like Dash. I'm sitting here staring at the Dash truck right in front of me. I'm not going to put it on camera, obviously. The belief in these coins and the ability of the creators of these coins and the CEO of these companies that are in charge of these coins, like Zcash, to just print money for themselves and then buy up, legitimate projects just to pump their own coins that they print for themselves and destroy these projects is basically how you eliminate good competition and proceed with shitty competition. I always go back to Skype. The day Microsoft bought Skype is the day voice over IP took a giant step back. And I think the voice over IP game has been somewhat struggling ever since, versus, you know, letting Skype continue to do its thing.
Great. All right. Thank you, guys, gentlemen. I guess we'll follow this one. It'll be very interesting to see how they implement this acquisition. I know that BitTorrent had a lot of issues in the past, obviously. They tried to pivot a lot, and they were very unsuccessful. It seemed as if they were kind of a tool looking for a business. So I couldn't agree with you guys more, but we will only see how this plays out. Sorry about that. So let's move on to even more news. Seems like a lot of news today. So BitThumb, 31 million crypto exchange hack, what we know and don't. So this was the latest one that came out. So I tried to grab this one. So, right, so very simply, apparently 32 million now is what it was saying, but I guess now 31 in coins were stolen, and BitThumb is the 6th largest crypto exchange, right? It was hacked and then it stopped trading. So that's actually, you know, no small amount. So just to say what this article says is what we know. 1, Ripple was targeted. 2, BitThumb officially confirmed the breach early Wednesday morning local time. It appears that security issues were already drawing attention from the exchange at least several days prior. 3, an hour before BitThumb confirmed the hack on its website and official Twitter account, the exchange reported the case to the Korea Internet and Security Agency. And 4, immediately after announcing the hack, BitThumb confirmed it would pay back victims using its own reserves, but that tweet has been removed. I haven't seen it go back. If anyone wants to tell me that it has, that would be very interesting. But to date of the show, it has not gone back. So, Jimmy, another hack, and they have been hacked definitely before. What did you think of this story?
Don't keep your money on exchanges. That's the big lesson here. I don't know exactly what happened, but you know, the mempool is obviously suffering as a result of their incompetence. And you know, if you do a bad job in crypto, you're going to get punished. We'll see exactly what happens with this exchange. There's some speculation that the amount that was stolen is exactly or very close to their tax bill. We don't know if that's the case, if it's internal, if it's external, or whatever. Very, very difficult to tell. And this is the problem with a lot of exchanges, is that you have no idea if it was somebody, a hacker that was from the outside, or just some disgruntled employee that's just you know, taking the money out in an undetectable way. We have no idea. We do know that they are one of the biggest exchanges in the world. And certainly the largest in Korea. So the fact that they got hacked is a big deal. But that said, it's very interesting because the price didn't react quite the way you would expect, because the price has actually gone up since the news of this hack, which is quite interesting. And I'm sure Tone will speak more to that. But yeah, I think this speaks to the anti-fragility of Bitcoin. Anytime something bad happens, sometimes people are like, hey, you know what? That's good. That's you know, like getting the dregs out of the Bitcoin ecosystem, and that's what needs to happen.
Gotcha. Thank you. Giacomo, do you have a follow-up to Jimmy?
No, I did add a few things to say about this news, but Jimmy just said it all. So yeah, usual comments about exchanges, they are dangerous. A specific comment about possible inside jobs, which is raised by the possibility that they could actually use the lack of transparency of cryptocurrencies, also for self-serving purposes. And then also a comment about mempool, even without the hacks, this kind of management of the mempool was a bad one. So they would have lost people's money, not just because of hacks, but even because of not batching and not consolidating outputs before. They are doing it now in a very, very goofy way. Like there is a good series of tweets by Whale Panda, which is also pointing to the possible tax motivation, but also is pointing out what is happening with the mempool, and is making a comparison with what Sapo did in order to consolidate their TXO set. And it's demonstrating that you can consolidate your TXO set in a way that makes sense and doesn't spam this way. So yeah, this is a clear example of incompetence, and it's another news that screams use the exchanges just to hit and go and don't store anything there. So basically, I repeated everything Jimmy said with another choice of words.
Thanks, Giacomo. Tone, what are your thoughts? We lost you.
Oh, sorry, I was on mute.
There you go.
This is one of the 5 reasons why I do not trade crypto. I just don't trust my Bitcoin on any exchange, whether it's insured exchange, regulated exchange, unregulated exchange, it doesn't matter. This is one of the 5 reasons I don't trade, because my Bitcoin is too valuable. I'd rather trade my US dollars in a US sanctioned exchange because I know my money is safe. I know I'm not going to get hacked for my Apple stock. This is why I focus my trading on traditional markets and not crypto, for this very reason. And you'll never know if they, you'll probably, well, I mean, you could know, but you do not know if this was an inside job or an external hacker. And it doesn't even matter which one is worse, right? Is it you had the best security from external hackers, but your CTO stole the money? Is that better than having a CTO that doesn't know what he's doing and you got hacked externally? I don't know which is worse. They're both equally bad. And this is the risk you take by leaving your Bitcoin on exchanges. Look, we all want price discovery. You want price discovery, but you want this price discovery to be meaningful. You want price discovery to be meaningful. Everyone always blames the futures market for gold's price discovery. They always say, oh, all these manipulators, they're short selling gold. Like, I kind of agree. And I kind of, like you want all the buyers of Bitcoin and all the sellers of Bitcoin to be longer term holders than short-term traders. That's what creates some of these distortions. I mean, look at today. Bitcoin fell about what, $150 a few hours ago, and I just saw the price, it's above 6,800. So now it just went up $200, right? I mean, these are short-term moves. And the more people learn their lesson that when you play this game of, hey, I can move the price by 100. I can then move the price in the other direction by 200. I can then move the price in the other direction by 300. You are picking up pennies in front of a steamroller. And the steamroller is a hack of your exchange taking all of your money. And this is a good lesson. And I kind of almost hope these lessons continue to happen so that all of the trading on Bitcoin for its price discovery are meaningful. So I'm impartial to this news. This is your lesson. This is what Bitcoin is.
Yeah, and to your point, it was $200. Moving on to Tether, and I guess just one last comment, which was in the article, against, just hot wallets and cold wallets. It said that according to representatives from the Korean fraud detection project Sentinel Protocol, BitThumb's hot wallet was hacked on the night of, yesterday, prior to the hack, and that BitThumb had moved a large amount of Ethereum to cold wallet storage after noticing abnormal access to its servers, also announcing an abrupt server check in order to maximize security settings. So it didn't seem as if they had their security issues in control at all. So it's your guys' points. So, okay, Tether. This one's Interesting. And we have their report and also their official report here. I'll keep it on this one. So an audit was completed yesterday that on June 1st, Tether did have enough money to cover the outstanding Tether. And this is what everybody's been waiting for, and the market popped. But what they said this morning on World Crypto Network, and big shout out to you guys, great job, is that they limited the scope of their analysis to 1 day. 1 day. So looking at one point in time, if there was enough money, and this is different than saying that Tether, was outstanding. And no one ever does an audit on a 1 day basis, right? Audits are done for a year, ending at the, fiscal year end or quarterly, et cetera, where they can draw conclusions based on the finances, but you can't do it on 1 day. Okay. So anyways, with this said, again, I will say, right, they could have moved money in and then out the day prior and after. It was ridiculous. So Tone, I'll let you have fun with this one.
Oh God, again, I'm sorry guys. I didn't get a chance to read the stories because I was doing a 3-hour stream on Freedom's Phoenix right before this. I streamed it on my channel here. So I'm not understanding the audit, like which third-party company did this and why would they agree to just do it over 1 day? Can you, is there any more news on this, Leah?
Yeah, I'll actually bring it up for you.
Yeah, there is the link to the specific report of the company that accepted it. Yeah. Yep.
It's,
and what did they say? Did they say there's actual dollars backing every dollar of Tether, or there is what exactly did they say?
Giacomo, do you want to take this over?
Yeah. They are claiming that there are dollars backing every Tether in circulation by they're not. So the interesting thing here is that you cannot perform a public proof of fiat, proof of reserve in fiat. That's one of the problems of fiat money. So you have just to trust this company here, and you cannot meaningfully link their statement with any kind of on-chain proof of the Omni and the ERC20 tokens in existence. But what they say is actually a confirmation of the existence of the US dollar inside the banks. This stuff plus the things that Tether guys told me the other time about they are using a full reserve bank should be actually enough. I think that this is pretty much convincing, at least as a response to the question, why aren't they using some kind of independent third-party audit? Of course, we can ask why just 1 day, even if while a continuous proof of reserve would be tricky but interesting to develop on Bitcoin. On fiat, that's just very, very difficult to do. I mean, usually they are periodical. I guess that what Tether should do right now would be to find other third-party independent companies to perform the same kind of auditing, and to do that at least periodically. I mean, it will be a normal part of the business model of a custodian company or distributing IOUs to just continue to perform this kind of checks. But I think that this is a good response to what was a very long-standing alarm about fractional reserve Tethers. And I don't find any kind of counter argument to this unless which is not claiming that this auditing company is lying because paid or something.
That makes sense. Thank you, Giacomo. Jimmy, what did you think?
Well, I mean, I don't understand why they're not hiring a normal accounting firm to do an audit. Why are they hiring a law firm? Law firms don't know how to audit stuff. That's the purview of accounting firms. So this just feels really kind of weird to me, and that just, it doesn't really make any sense. It's if you're going to have an audit, you either go all the way and have a Price Waterhouse Coopers or something, like come in and audit all your books and say, okay, that this actually exists, or you don't do an audit at all. This is sort of this half-assed measure that doesn't really prove anything. It's just, oh, okay, we saw some bank statements or something like that. So I don't really know what this proves other than this law firm, which isn't an expert in accounting, saying, you know, I don't know, vouching for them, I guess. I don't know. It's kind of meaningless to me.
Gotcha. Tone, last thoughts? We lost you.
He's muted.
I had to get to the mute button. I was looking at the chat. I'll make it very quick. I know Jimmy has to go in a minute. I will say that like whether Tether was or wasn't fractional reserved was never my biggest problem with Tether. I continue to say the same thing. It's irrelevant whether Tether is or isn't fractionally reserved to me personally, because if it's not fractionally reserved and all the money sits at some bank, all the US government has to do is claim that Tether is being used for illicit activity and confiscate the money. This is what they did with e-gold. If all the money is there, Tether is e-gold. It's a crappier version of e-gold. At least the e-gold people had a claim that that gold has always been currency for 5,000 years. What do the Tether people have to argue historically? It's almost irrelevant to me whether it is or isn't fractionally reserved. It's gonna blow up either way. That's it.
Yep, I'm muted. I guess we'll have to get back to this one another day. Look at the mempool. So Jimmy, what the heck?
Yeah, so rumor has it that most of the mempool transactions are from Bitsum, and they're the ones that are actually putting in all of these transactions. It could be Bithumb itself, or it could be hackers that are willing to pay whatever transaction fees to get the money out. Now, we don't really know. Can you refresh the page, Leah? Let's, because I do want to show that it's changed a little bit. Scroll up. That's interesting. Maybe my screen's a little different. Oh, okay, yeah, that's the pending transaction fee versus that. Yeah, so there's you know, it started at around 2:30 p.m. yesterday, something like that. If you look at the Korean time, that was like a little bit past noon or something in Korea, and that's when all of this started happening. I'm going to guess that this continues to happen because there's I mean, this is just Bitsum sort of flooding the mempool a little bit. So you're probably going to need to put in 100 plus to get it in the next few hours. If you need it in the next block or so, 200 seems to be the number. For a day, I'm going to guess that it's going to be 10 or less Satoshi per byte. You can probably get in at that point. But yeah, it's going to take some time to clear. Probably this evening, a lot of this will just clear unless, Bitsum has more transactions to do. A lot of the transactions, from what I'm hearing, don't make any sense. They're paying like 0.1 Bitcoin to move like 0.4, which is a really expensive transaction. Again, this could be hackers. This could be
it makes
people.
It makes total sense if the 0.3 is free to you. Like, you'll pay 0.3 to steal 0.4. Like this is the argument against proof of stake. Like you will do everything and anything. You'll spend 99% of your reward if you're guaranteed to get the reward.
Yeah. So this is continuing to happen. We'll see what we'll be monitoring this at least for tomorrow. If you can hold off, I would hold off until the weekend. I imagine a lot of this fee pressure will go away by the weekend, but who knows? It's hard to say. We do know that evenings and weekends are when mempools tend to clear.
All right. Well, Tom?
Sorry, on a final note of this, isn't it great that we're not even talking about who to call to make it stop?
Yeah, it's not centralized. All right, so I have to go, guys, but this song is done, so bye-bye.
Bye, Jimmy. Giacomo, we love your tweets. tweet storms. Although I'm please live chat. Will you make his tweet storms into Medium articles because they are just golden? And what is that? You guys know I already have a fetish for analogies, so bear with me about this one. All right, we know it's going to be good. What happened in this one?
So what happened is that my daughter was awake at 5 a.m. and I tried to get back to sleep, but it was difficult. So I started to think a little bit about coinage, and so I was thinking about legal tender. And I know that during the history of mankind, for most of the time, there was no legal tender and no legal monopoly on money. The actual money used by people was usually most often gold, and gold was not controlled and issued by the central bank. And there was no law to impose before 19th century to impose the use of gold, because gold already had the market value. So there was no need there was no need to pump artificially the demand with legal tender laws. So why people still think that there was a heavy influence of governments inside gold money, because you think about the emperor printing his face on top of the money, or the local prince or the local king. And so I started to think about coinage, and I realized that the reason people used coinage is mostly because verification costs for gold are very, very high. I mean, you can verify independently that what you get, what I give you is actually real gold of the same amount that I'm telling you during this exchange. But in order to verify that I'm sending you the exact amount of gold and that it's real gold and not counterfeit, you have to check it with a hydrostatic scale, which is something that you can do, like Archimedes, trying to understand how much gold there is in this kind of statue. So you put it in the water and you measure the volume of water moved, and then you compare it with some kind of benchmark with pure gold or with some kind of different metal. Anyway, you can verify, but you don't because you're lazy, and this verification process is expensive and boring and not practical during usual exchanges. So what you do, you delegate to third parties to print their signature on top of the coin, and then when you will receive the coin, you will not test, you will not verify the coin yourself, but you will just trust this third-party entity in order to verify the amount of gold for you, because you can see its face, and so you are just trusting this third-party entity. This is legit from the point of view of a user, and there would be no point to go to a merchant during the Middle Ages telling him you should always use your hydrostatic scale. I mean, it's natural, it's rational that they will just accept the face of the local coinage provider. But the global overall systemic effect is that overall the market in some region stops as a whole verifying the coins, and so the coinage provider can start to debase the money and can start to print money where there is 5 grams as a sign and as a signature, but they contain 4 grams, and the extra gram is now in the possession of the coinage provider. So they start to debase, and they start to basically to steal money and to inflate money and to degrade money.
And Giacomo, this usually happens when the government shows up and says, you shouldn't put your trust in this one guy, we will do a better, more secure job, and then they take it over.
It does. So I absolutely agree. That usually happens when you have nationalization of money. It happened to a tragic scale right now, where actually you have a government that is printing money without any kind of underlying assets. So the supply is completely arbitrary and can be manipulated at will, which is central banking. And the demand is also arbitrarily pumped by legal tender laws. So right now with government, there are no limits in the possibility of manipulation of some fiat currency price. But even before the nationalization, the statalization of money, my point was that for pure market dynamics, even before the violent intervention of a specific government, people started to relying too much on third parties because the self-verification was too hard. So this is where my twist storm connects to Bitcoin and to the idea of SPV. Basically, SPV is this practice in which you don't verify by yourself that the coin that you receive are real Bitcoins, because they respect all the inflation rules and the signature rules and every kind of rules of Bitcoin, but you just trust the heaviest chain. So you just check the miners that are mining over a chain. You download the chain headers, not the entire blocks, and you just verify with the Bloom filters that your transaction, the transaction you received, is in there. And so you just say, if it's in there, then I will just trust that the majority of hashing power will not try to rob me, which is exactly like saying, if I see the face of the prince or of the jeweler or somebody on this coin, then it means that he's not trying to rob me, so I will accept it, which takes you eventually to strong incentives to debase the money on behalf of the coinage provider. So this trusting miners for the validity of your payment is not the same than trust a miner for the confirmation of your payment. So in the normal Bitcoin full node model, you can individually, alone, verify the reality of the payment. What you have to trust the miner about is just that this payment will not be reorged away with a double spend, which is a very specific attack, because you can only, what can you do with a double spend attack? You can only, if all the miners collude with one guy that is paying you, the most they can do is just to take back their money on that specific trade, sustaining continuously the hashing power majority. But what they can do, if you trust that, not just against double spending, but instead of verification, there is no limit on what majority of hash rate can do. They can promote an altcoin like Bitcoin to X. They can steal Satoshi's money. They can steal your money without a valid signature. They can inflate. They can change the inflation schedule. Actually, when there was the first and the second halving on Bitcoin, some miners tried to put their hash power not on the real valid chain, but on a chain that was continuing to paying them the old amount of reward in order to make more money. That's natural. I mean, if you completely trust the coinage provider to do verification for you, then the coinage provider will eventually try to fuck up with you. Of course, this is more likely if there is a government monopoly and the government imposed standard. But even in a free market dynamic, it's very, very dangerous when people start to give up verification, independent verification processes in exchange for outsourcing, trusted outsourcing. So I think that the link there is very, very, the analogy, I mean, I'm very satisfied by the analogy. It helped me to understand better, to explain better why you do need a full node. It's difficult to run a full node, like it's difficult to bring a hydrostatic scale with you in the shop. But if everybody in the Middle Age, I mean everybody, if a strong majority of people during the Middle Ages was using hydrostatic scales instead of coinage in order to verify gold, for as impractical as it will be, you would have less debasement of money, because if the prince starts to debase, everybody will just recognize it immediately, and Gresham law would just make the bad money spent very, very fast, like Venezuela currency or big cash, instead of the real money, which will be hodled and not spent.
Giacomo, thank you. Thank you. That was brilliant. Tone.
I mean, that was all great, Giacomo. I'm not gonna comment or debate you on any of it. I just want to point out to the viewers that while Bitcoin has always been, at risk of a 51% attack, at least theoretically, in practice, attacking 51% attacking Bitcoin and reorganizing transactions is a death blow to all blockchains. So yes, the 51% attack on Bitcoin is still a concern, but it's only a concern from an entity that wants to destroy Bitcoin. And the only entity that, by default, the only entity that would be is the government, is a government or a combination of governments, because even Bitmain or any of the current miners are going to risk the destruction of all blockchains being a store of value by 51% attacking Bitcoin. However, the 51% attack surface on any blockchain besides Bitcoin is completely different, because unlike Bitcoin, by 51% attacking another blockchain, you can then convert that money into Bitcoin, because 51% attacking any blockchain but Bitcoin doesn't hurt the store of value blockchain property. In fact, it encourages the store of value blockchain property, because Bitcoin is thought of as more secure than your shitcoin. So when Zencash gets 51% attacked, it hurts Zencash and it strengthens Bitcoin as the attacker converts the Zencash that he scammed into Bitcoin. And people just don't understand the power dynamic of 51% attacks and why they are infinitely more common, and people want to do them on altcoins, while there's very little motivation for a private company or person to do it on Bitcoin. Does that kind of like make sense a little bit to you guys? Hopefully for the audience as well.
Yeah, for me it does. I mean, it's very important the distinction between a 51% attack that only double spends and a 51% attacks that can also change the rules. In many centralized coins, the 51% of the miners can actually easily change the rules, like in Bcash. In Bitcoin, it can only double spend money, which is, as you said, a problem, an inherent problem of every kind of alternative blockchain. It's just easier to attack any other blockchain than Bitcoin.
It's actually, yeah, sorry, Giacomo. It's actually interesting that you say that. I'm going to go ahead and say that a 51% attack on an altcoin that also changes the fundamental rules on an altcoin is going to be a lot rarer, because you want a 51% attack. You want to steal the money, and you don't want the coin you're attacking to immediately go to zero. By 51% attacking and changing the rules, you're increasing the probability of the coin attacked to go to zero, so you can't even steal the stuff that you're doing. You want it to be as coercive and under the table as possible, and every second of delay for people to find out that you just 51% attacked it can cost you money.
I would have said exactly the same just a couple of years ago. But now, if you just think about what happened in Ethereum, I mean, the point is now that in many of these coins, people cannot even detect if you are changing the rules. So all this centralization, like in the case of Ethereum, created a situation in which people think they are running a node, but they are just running a private key container. They are not really running the node. So they cannot even detect if the rule has been changed or not. And when actually some of these centralized scam coin blockchain did change the rule, and I was expecting, like, I mean, after the DAO, my reason was, I mean, everybody's saying we'll just run away from this, because at the first problem, they just modified the history in order to bail out the insiders. So this is worse than actually worse than Lehman Brothers, because at least Lehman Brothers failed. This is actually the continuous bailout of insiders, and people did not run away. Actually, after 1 year, we have more stupid money there than ever. So if I was an attacker and I could change the rules on a scam coin, knowing that this kind of market really do not care at all, I don't know, I would probably do that. I mean, I hear your point, but I think we are still assuming a rational market. And at least in the scam coin domain, we are not in a rational market anymore.
I think that's 1,000% true. And with that said, Tone, TA? Actually, he's talking to more of his friends at his yard sale in the boondocks.
I'm sorry, guys. Is it my cue?
Yeah.
All right, my bad.
And thank
Yeah,
you,
I think
Giacomo.
my Bcash debate's tomorrow, and my presentation is tomorrow. The debate I think is at 10 a.m. and the presentation's at 6. Though it might be the other way around. Oh, that'd be great. Or I might live stream it. I haven't thought that far ahead yet. Cool. Hey guys, yeah, this is gonna be interesting. All right, let's go to screen share. Somebody wants me to talk about the yield curve inversion. Not today, guys. Maybe when I get back from this trip. All right. Oh, did I forget to do screen share? I did. All right, here we go. I gotta raise my brightness here and put my sunglasses on. Here we go. A lot of stuff I gotta get out of the way. Man. Okay. Let's magnify this. Let's see what's going on a weekly chart. If we did this show about an hour and a half ago, it would probably look it'll probably look very, very different. There's not much I can say. It's still the same thing. Like I've been saying for a while, the drop from the top of the triangle a couple of days ago down to the bottom of the triangle was way too fast. The breakdown from the triangle was a little unexpected. I really thought this 5 candle, last week's candle, was going to be a little more doji-like candle, getting stuck at the bottom of the triangle. If you combine last week and this week's prices, you do have that doji. So I am not surprised at all. I believe the upside is limited. Looking at the weekly candles, I am limiting the upside to the top of the triangle and the 50-week moving average. So I don't expect the weekly bounce to be anywhere higher than 8,000. Now, keep in mind, I want my 9. I want that 9 because if we don't get a 9, we have tried getting to a 9 on 3 occasions on this downswing from the 20,000. We only made it down to, we made it to a 7 in February. Then it got reset. We made it to a 4 in April and it got reset. We've now made it to a 6. You want that 9 to give you some kind of a technical outlook on the future. If you don't get the 9, you're probably going to reset. And then guess what? I'm going to wait for another 9 weeks of down at some point in the future until we can find that bottom. This bear market is going to continue to drag out, and it may not be all that pretty. Let's go to the daily chart. Here's the daily chart. You saw it update right there real quick because I haven't looked at these charts since the last time I did a live show. You are on a 4 of 9. The current day is being very volatile. It bounced right off a moving average. I don't even know which moving average it is because I have stuff blocking my screen. It's the 7-day moving average. And again, my upside for the daily chart remains $7,050. That is my ultimate upside. At that point, you have a high probability short. And right now, you have a lot of risk. If you're going to go long, you have a lot of risk, very little upside. If it gets to 7,000 and shows weakness, you have a high probability trade. Lots of very low risk because you can set your stop loss at 7,100 and lots of potential gain all the way down to 5,000. Now, the CMF continues to trend up, which is positive. The RSI went oversold and is starting to go up. This is positive. These are all positive metrics. I can see why people think that we're going to go to new all-time highs, but I continue to disagree with that view for now. Now, the 12-hour chart is stuck at exactly 6,800, which is kind of what I expected. And if it does break above it, the upside is very limited. I can see it going to maybe 7,000. There is a moving average in the way. You're also on a 5 of 9, so maybe another 2 days of upside, and then the 12-hour chart is going to end. Here's the 4-hour chart. The 4-hour chart remains stuck under the setup trend line, and you saw this 9 that gave you a perfect 1 to 4 candle correction, and now we have a countdown. If we can break this line at 6,800, then you want to look at the 12-hour and the daily metrics of how high it can go. There's lots of resistance on those metrics and very little and a lot of risk. The 1-hour chart gave you this beautiful reversal candle known as the shooting star. And if the price, I mean, you're on a 5 of 9 on the hourly. If you get that 9, look for a bounce that could be more optimistic. But if you're a short-term trader and you see a beautiful reversal candle like this, you enter below the low of this candle, which didn't happen the following hour. So you would potentially go on, you would short on the following hour when this one candle traded below the 6 candle. That's pretty much it. I happen to have Ethereum up. Nothing relevant to say here. Nothing really relevant to say here. Here is gold. So here's the thing with gold, right? Here's the weekly gold. Because you had a 9 and it ended at the bottom, and the current candle is now giving you a lower low, I am treating this 9 as the beginning of the downtrend and not the end of it. The follow-up candle to last week's 9 is telling me that gold is about to take a bit of a nosedive down. Here's the weekly gold. I guess that was the daily, or they were both weekly. What's going on here? Oh, this is the monthly gold. Sorry. The monthly is on a red 2 of 1. I think gold is about to see some pain. S&P is still recovering from its 1 to 4 hour drop. Anyway, I think I'm going to end it there. Maybe I'll do a trading Bitcoin show soon. And let's get back to our little group here with all 3 of us. There you go. That was a very fast one.
All right, awesome. We will let you go. Tone, are you wearing sunglasses underneath
I
that
am wearing
hat?
sunglasses. I can see my screen better.
It was looking kind of cool today. All right, we'll let you have fun at your PorcFest. Giacomo, you all have a good time today too. And just mentioning, everybody, don't forget, you can listen to this podcast on iTunes under the Tone Days podcast stream. Thank you guys so much and have a great day. Thanks for listening, everybody.
Bye, guys. Good luck trading.
Ciao.
Oh, bye, Thor.